Hello everyone, my name is Layla Andrews and welcome to my weekly analysis for the week commencing what would have been the 22nd of October 2017, but I'm bringing it to you on the 23rd because I'm afraid I was busy yesterday. Today we're going to be looking at Eurodollar and Aussie dollar, and we're going to start as usual on the monthly time frame because I like to remind everybody of the greater context, i.e. the larger obstacles that we may well be doing battle with, which doesn't necessarily make itself apparent on the lower time frames when you're actually intraday trading, but you would need to know where these are because these are quite a big deal. And the big deal levels that we're still dealing with on euro, which we have been doing so for at least 2.5 months, are the 200 and the 50 in the red level just coming under here, which directly correlates with the level 1700, and the 200, although is sitting just around about the 1.21 level, the line in the sand for me was the psychological level of 1.2, which we have now closed below for 2 months. And this is the actual price action for September that I will be reading. We don't read the live bars on monthly charts because they can be drastically different from one week to the next, and they don't really give you a great deal of information. If you want information on what the monthly is doing, then we need to be looking at the weekly chart, which we will be doing. So there'll be a bit of interim information there. But for now, what I want you to think about is the fact that we've had a very large momentum move all the way up to connect with a pretty full-on obstacle. It was probably the final obstacle, if you like, and from this point we have gone into a bit of a selling period. And really it's about what the market might try and do next, because we're not really in the habit of making predictions. What we need to do is look around us from where price action currently is and make assessments on variables of how the market might behave. And when we start to see one of those variables starting to take shape, then we know which one of the possibilities it may be, or rather we have an idea about which one of the possibilities the market might be taking, and therefore we've got a little bit of a head start because we've already had a thought about what that might look like. So with this particular case, clearly the level of 1.17 is the level we've got to deal with. Yes, it's a level, it's a price level, which also correlates very nicely with this highest point on the range that we've recently escaped, and it also happens to coincide beautifully with this 50 EMA on the monthly. So you can see that this is the level that we've got to deal with. Now, should we break through that, which we need to look at the lower time frames to find out how the market might be trying to do that at the moment, but should we break through that, then the next stage would be a press down into potentially the 1500 level to connect with this 10 EMA. So this is my greater picture, if you like, connecting with the 10 EMA at about the 1500. Potentially we might even connect with the 38.2% fib level as well, but that's closer to 1400. It's not impossible that the price might actually push through the 15, reach 1400 and then end up closing above 15. That's quite possible, but at the moment I'm just thinking this in quite simplistic terms, possibly break 1700, move down to approximately 15. So let's have a look at the weekly level and talk about how this market might be trying to deal with what it's currently got going on. So we've described what, or rather I've described what the monthly is doing, and as you can see, there's no evidence of this above here. It looks like open space, so you could be forgiven for thinking there really wasn't a reason as to why this market might have turned around here, or that you may be inclined to think that its ability to continue up higher might be easier than it actually could well be, seeing as it's dealing with a monthly 200 EMA, which is, as I say, it's a large obstacle, so we need to really take that into account, and we need to know where those are. But in terms of the weekly, we've now got support coming up underneath the 1.17 level. So this is going to be, again, adding to the 50 EMA that we've got on the monthly. We've now got a 200 EMA adding support, and we've now got a 20 EMA coming up. Now, something that I want you to take notice of here with this 20 EMA is that it is starting to bend over, and this is it's not something you might be noticing particularly at the moment, from the point of view that this is quite a subtle bit of information that I'm reading here. But clearly the amount of time that this takes going sideways, the more shallow the angle on its nearest EMA will become. And that generally indicates that the market might be thinking about pressing into this level. And if it's thinking about pressing into this level, then there's potentially a possibility of it breaking it. So I am seeing, even though there are these support levels here, I'm seeing a 20 EMA that excuse me, isn't looking as full of momentum with price action. And when I say momentum with price action, what I mean is the EMA is not showing that the market wants to take a strong directional move. What it is showing me is that the market at the moment is looking slightly heavier to the downside, and it's all about whether this support level around this zone actually can hold. What I do see in terms of a cyclical point of view is that we've been making higher highs and higher lows. This is your higher low, higher high here. But from there, we've come down. We've actually made a matching low here, and from this point onwards, we've actually pushed higher, but we've made a lower high, as confirmed by this recent price action that went for the last week. We're not actually looking at this one because this is current, this is live, so this is not going to tell us very much at the moment. But this one here is what we're reading, and in very simple terms, we have sold off, pulled back, potentially another sell-off. So it's all about whether we can break the support level at 1700 and deal with this 20 EMA and this 200 EMA, and obviously the 50 EMA on the monthly. So if price does manage to break through those, then that really does show that there's quite a bit of commitment to the downside. Therefore, we would be thinking of this in terms of, well, what levels of support do we have? And I've already spoken about the 1.15 level. And theoretically, if this wanted to continue selling and actually give us a deeper sell-off, we could end up connecting with the 50 EMA on the weekly, which would bring us in line with the 1400 level, which also sits very nicely with this fib level of, I'll have to squash this up so that we can see it, fib level of 382, as I said earlier, around about the 1.14 level. So there's a couple of ways in which this can pan out, and I'm starting to sort of talk about events that might take a good couple of weeks to occur. But as it stands at the moment, this market is looking heavy to the downside simply because we have met a large obstacle. We've had a fairly counteractive sell-off, and by which what I mean is this is no longer really a market that's about higher lows and higher highs. This is actually a matching low, and it hasn't really taken the opportunity after a matching low to push back up to try and deal with this high. It hasn't actually done that. It's actually given us a lower high, which is, in my opinion, the very early signs and the beginnings of the rules of a downtrend, which are high, lower low here, push down potentially to meet one of these areas on its way down. So I'm seeing this now as a market that was in a state of uptrend, which is now starting to change its appearance from being bullish to being slightly more inclined to the downside. But as I say, really we've got to get through this 1.17 level because the amount of obstacles that are actually holding this up, not least of which as soon as we actually break that round level, then we've actually got to deal with this here, which is the about 1.1635. So here is again another layer of support that we need to deal with. And as I say, if we get through this, then there's clearly a lot of bias towards the selling side because that's quite a lot of obstacles to break through. But as I say, first one I'm seeing in terms of support would potentially be this 15 at the 1.15 level, which of course was the line in the sand for the range that this market was making for a good couple of years. So that's really where I see the market wants to try and connect with. If we do break this level, that seems like the next logical place for the market to move down to. However, well, we have to have a possibility in our as a pros, not pros and cons, but we need the opposite argument as well. On occasions, not always, sometimes the market has a very clear sense of direction, but when we're trying to break a very key level like we are at the moment, we've got to be bearing in mind that it might hold, and if it does hold, what could we see? So theoretically, if we've had a sell-off, we've had a pullback, which in some respects you could describe as gearing up to go for another sell-off. If we are unable to break this level and we actually hold at 1.17, and we'd need to see this on the lower time frames, that's the daily and the 4 hour, where we'd start to see price action flattening to the side and then starting to produce candles which have got longer wicks. We might start to see first signs of tiny cycles that might have higher lows and higher highs. You might see that on the hourly. If you start seeing that, then we may well be on the attack to go back to the 1.19 level. I've got to call it that for the time being because that's a pretty important level that we'd have to take into consideration before we could even think about going back up to 1.2. So if we do hold here, then back up to 1.19 is a possibility. But at the moment, this market looks heavy to the downside, and it's just a case of whether it can break through here. So now let's have a look at Aussie. And Aussie actually is slightly similar. Just take this back to the monthly. Slightly similar from the point of view, again, dealing with some hefty obstacles above its current price action. Excuse me. So here we have the 50, which is the red one, and the 200, which is the yellow one. Both EMAs, both acting as serious resistance, combining with the price levels of 0.8, which of course is a big round number, and it's also a psychological level. Price did manage to spike through to 0.81, but ultimately all these bars have closed below 0.8. So for me, that's the line in the sand, not least of which because it's the psychological level as well. So current circumstances are that we were in a downtrend, lower highs and lower lows. Let's not forget that. It's very important to remember which direction you're going in and how the market is moving in that direction, i.e. the cycles that it's making. But here we have higher lows and higher highs, sort of. This is obviously a market that's being squeezed into a sort of horizontal resistance level. So you will tend to find that the tops are flat, but the underneath is rising. And that is really a market that is on the attack, and it pulled it off. And of course now we have a new high, and this being the highest point of all. However, ultimately, these EMAs did hold, so the market sold off. So we're now in the down part of our upcycle. So this was the push up, this is the pullback, if you like. And what we've gone from is using EMAs as a means of resistance to now using them potentially as a means of support. And by that, I mean that we are starting to look like we're going to be connecting with this 10 EMA on the monthly. And that could well induce an opportunity for the market to, once it's settled itself, carry on back up in the mode of making higher lows and higher highs. It's just going to try and continue what it's doing. Now, whether it's actually capable of breaking through the 0.8, we will have to deal with that on the basis of when we actually arrive at that point. But that would be the potential area that we need to get to. So let's have a look at the weekly and see if we can see some more detail on this. And what we've got here is very similar to euro in as much as we've come into, as I described, major obstacles on the monthly. We also have similar problems in terms of obstacles from the weekly, where the 200 is actually acting as a seriously strong level of resistance as well, coupled in with this whole zone of price levels that we've got. But the 200 is lining up very nicely with the 0.8 level. And from this point, we made a fairly weak high, in as much as it should have gone much higher than this, but it didn't. It's the distance between these two is a little bit shallow, which is one of the first things I look for when I think a market might be struggling with an obstacle. And we have subsequently had a much deeper sell-off. We've actually taken out this low, that being the low here, and now this is our new low. So we've sold off, and this was effectively a pullback. And at the time that I talked about Aussie last week, it was a little bit difficult to say exactly whether this was going to be a strong return from the support level here to bring about another attack of the 200, and there we might find our lower high, or if it was actually going to struggle with this 79 level. Now, it's a good strong bar, and theoretically this should have carried on. And this is an interesting point, and it's something that I often talk about with people on a personal level, about how when a market has given itself a really strong opportunity to do something and it doesn't take it, that's quite a good indication of the fact that the counter bias, if you like. So in this case, if we look like we had strong buyers on board, if they can't take this market higher, then clearly that's because there's either not enough buyers or the sellers are much stronger in terms of defending this level than we originally thought. So what I'm seeing here is a good sell-off that followed itself with a very large bar, which theoretically should have at least continued up to attack the 200 around about the 0.8 level, and it hasn't done that. It's actually stalled completely at 0.79, didn't even really attempt to get above it, and we've been selling off ever since. So the way that I would read this, slightly similar to Euro, in as much as we've got a zone here. My line in the sand is 0.77, and we also have a extra level of support at 0.774, which is where the market has sold into, which also beautifully lines up with a retracement level of, I do believe that is the 50. Yes, it is, which also lines up beautifully with the 50% fib. So there's a lot going on here to give reason for this little bit of buying that occurred, but it didn't have the strength to carry it on through, which is pretty indicative of the fact that this may well be biased towards the sellers for now. But we are, of course, in the greater picture, in a bit of an uptrend. So we have to bear in mind that what this might be is about a higher time frame pullback, which in itself would result in the appearance of a mini downtrend on a much, much lower time frame. But for now, we would be more in a selling period, and it's just a question of where does it need to get to in order to pick up renewed buying in order to potentially carry on this process of higher lows and higher highs. So at the moment, we've got these two levels, 0.774, which is where we are at the moment. So in very simplistic terms, what I see is a market that sold off, pulled back, has in fact given us a lower high now at 0.79 and is in the process of selling down. Now, if this is going to be about confirming whether 0.774 is actually the level of support, or does it actually need to press into the more sort of what I would call the level that I was really interested in, which is 0.77 at the 50 EMA, is something that we will need to be watching. But at the moment, I see potentially a sell-off into the support area of 0.774 and potentially as low as 0.77 to deal with the 50 EMA. So that's how I currently see this market. What I would want to say is that there is potential for a sell-off into 774, where if we do start seeing, as I described on Euro, lower time frame cyclicity towards the upside, it wouldn't necessarily show on a weekly at first, and you may not even see it on the daily, but certainly on the 4 hour and the hourly you might start to see signs of the beginnings of a consolidation followed by slightly higher lows and higher highs as a market starts to try and turn. So if we start seeing this at this support level, then I would say really it's trying to confirm that this is the support level and it's not actually going to make it down to 0.77. Conversely, if we break through and we actually see the same sort of price action configuration that I've just described, if we see that happening here, then again, that would be an early way of signaling that the market has found support at this level. But at the moment, I'm just seeing it weighted to the downside. Now, as I've said before, and this is not really a disclaimer, it's just we have to be realistic about what markets can do. Now, most of the time, I actually think markets behave quite logically, but there are occasions, certainly with extreme news releases, where it can do something which technically didn't seem wasn't really available information, but it's gone and made an extreme move in the opposite direction. So I say this because we've always got to be slightly alert to the fact that we need to be looking at the lower time frames for clarity on the fact that there might be a minor downtrend in this case on the hourly or the 4 hour, and that you're following that. If you see information in the opposite direction, i.e. upwards, then potentially what we might then have is a push up followed by what could end up being a higher low somewhere in this zone, and let's just call that 0.778, that then has the ability to go on the attack to the 79 level and back on up to the 8. I only say this because we need to be alert to the variables. I do have a bias, and it is to the downside, but there are questions about where that might settle. So just watch your lower time frames for early information about changes in direction. We've got the overall direction from the higher time frames, but it's the lower time frames that give us some of the early warning that we might need. So that is my view on Aussie and Euro. As I say, they both look like they are in the process of trying to confirm a nearby support level and confirm it or break it. Certainly in terms of Euro, it needs to think about breaking 1.17, and in terms of this particular market, it needs to confirm whether it's 0.774 or 0.77. Okay, thank you very much for listening, and I look forward to speaking to you again next week. Okay, bye bye.